Hi, and welcome to IRS Debt Free, where we help businesses and individuals reduce or eliminate their tax debts so that they can become IRS debt free without having to spend thousands of dollars to do so. My name is Madeline Vidal. I am an enrolled agent admitted to practice before the IRS. And in today's video, we're going to be going over what to do if you owe the IRS and you want to know whether or not you qualify for tax relief. We're going to be going over what the IRS formula is to determine your eligibility, and by the end of this video, I'm hoping that you will have a clear understanding of what the formula is, how it works, and whether or not you qualify for relief. I'm also hoping that this would be the first step that you take in order to become IRS debt-free. The formula involves several different things, so we're going to be showing you a slide so that I can detail and explain how it works and how you can figure it out. If you're here, you owe the IRS, and you might already know how powerful Uncle Sam really is. The IRS has the ability to try and collect by using several different tactics, including levying your bank account, garnishing up to 75% of your wages, placing a lien on your property or on you personally, revoking your passport, but the worst thing that the IRS can do is cause an enormous amount of stress for you and your family. And I want to be here to help you get through this debt and become debt-free. So the IRS uses what they call to be the reasonable collection potential, and that is the IRS formula. This formula is based on two separate criteria. It's based on the future income or disposable income and the net equity of your assets. And this is what they're going to use to determine what is an acceptable offer amount to them. So to calculate future or disposable income, we first need to gather all of our gross monthly income. And gross means before any deductions, withholdings, or expenses are taken out. Once we've added all these up, we need to go and sum up all of our expenses. But not all expenses are going to be allowable by the IRS. So in the next slide, I'm going to be going over what that is. So we got our gross monthly income. We subtract the allowable expenses per the IRS, and that's going to give us what our future income is. This amount will be multiplied by either 12 months or 24 months, depending on what kind of offer you want to make the IRS. To calculate the allowable expenses per the IRS, they are categorized into three separate categories. The first one is actual. So some of these expenses you are going to be able to use the actual amount that you spent. For others, they're going to be local standards that you use depending on what state and county you live in, and I'm going to place the link for this below so that you can look up your particular county and determine this. And I go into further detail on this topic in my free webinar, and you can register for that as well. I'll place the link at the end of the presentation. Then you also have the national standard expenses, and these are going to be across the board for everybody for food, clothing, public transportation, and out-of-pocket healthcare cost. Once we've determined what our future income is, then we move on to figuring out what the net equity in our assets are. Most people's assets are simply a home and a couple vehicles. If you have anything else like a recreational vehicle, rental property, you can also use these amounts. So we first need to determine what the fair market value of that asset is. If you're doing a home, for example, you can look up Zillow to get a Zestimate, is what they call it, to get the fair market value. Or if you have a current appraisal on your home, you can use that amount as well. Then we're going to subtract 20% of that, because the IRS considers that if you were to sell the asset in order to pay them, you might need to do so quickly, so they use a quick sale value. And so it's a 20% deduction from the fair market value amount. And then we're going to subtract the loan balance or payoff balance for any of these assets that you might have. Once we've done this calculation for all of our assets, we're going to get what the available equity is on that particular asset. And there are a few exceptions that go into play, and I do go over that in the webinar if you'd like to register. So once we've determined what the future income is, we're going to add the net equity of all of the assets, the total, and that is going to give us the reasonable collection potential. And this is the number and the amount that the IRS wants for you to pay. So working with a tax relief firm or tax attorney, they really can't change these amounts. Your income is your income and your expenses are your expenses. So the reasonable collection potential amount is something that you yourself can calculate and determine your eligibility. So you might be thinking after watching that, like, hey, why do I need to hire a tax relief firm for if I can just do this on my own? If I have maybe everything I need, I can have a checklist of everything I need, all the forms, templates, calculators, etc. And maybe if I had the help of a professional that I can ask questions to, should anything come to mind, I could probably do this. And guess what? You absolutely can do this. You can do this if you have all of the pieces of the puzzle. That's why I've created a course that provides you with step-by-step guided instruction as to how to fill out these forms. I'll provide you with all of the resources, forms, letters, templates, and calculators that you might need to fill out the application correctly and make sure that you submit a successful offer to the IRS. And I'll provide you with weekly coaching where you can call and ask any questions regarding your case, where I can walk you through the process of doing that. You'll also have accountability because I will be holding your hand through this process along with a community of people who are in the same situation as you, who want to get out of debt, and who you can share your wins with. I'm hoping that this information was helpful to you, and I'm hoping that you use it to first determine your eligibility and to then take the steps to become IRS debt-free and get rid of this debt once and for all. You'll see here the link for the webinar. If you can register for that, I'll go further into detail on this topic so you can get better clarity. Again, thank you for watching. If you like this video, please subscribe or like the channel and share with anybody who you may think may benefit from this information. Till the next one.